right, it's Monday afternoon, end of the day, and I'm looking at gold and I see something I like here. On the daily, we've got a red candle, but as you can see, it's kind of pushing back up a little bit right now. So it's like it was a collapsing red candle. Now it's kind of stuck there. If I go to the 4 hour, I can see not only is there a green candle getting stuck right here on this red line, which is EMA 15, the 15-day moving average. It's finding support right there, and there's a green candle on the EMA 15 looking like it's about to bounce up. Also, when I drew this quick trend line, I just threw these couple trend lines on there. You can see that we're kind of trading in a channel right here, from here to here. We've came up to the top of the channel. We've just came down and reached the bottom of the channel. So now the next likely move in my mind is a bounce off the bottom of the channel. Now I could be wrong and it could cross below this channel, but it looks like it's stuck right here and pressing back up. So I think it's going to bounce off this channel and off this EMA 15, this red line, and shoot back up towards the top here. So I'm looking at a call. I'm thinking I might get a shorter term contract on this one, because generally I like to get 2 weeks on the contract, but it's because I expect the move to be about 3 days. And then I just take 3 times it by 4. So 3 times 4 is 12. And then I like to get at least 14 days on the contract. 12 really, but I just pick 2 weeks out. But this move, I think it's only going to take a day, maybe 2 tops. So I'd say 2 days tops on this move. So I'll just take 2 times it by 4 is 8. So 11 is actually enough. That's enough time for me to jump in this contract right here. The 20/50 11 day out is only 51. The spread's only $3. I like that. Chance of being in the money 49%, theta 0.02, time decay is low, delta is good, implied volatility is good. Let's look at the open interest, 617 in the call, 254 in the put. The contract just above that, closer in the money, 1,600 people in the call, 210 in the put. The contract just below that, which is out of the money a little more, 784 in the call, 62 in the put. So this is looking really good. I like this. There's a lot more people agreeing with me that this is going to go up rather than down. So I'm going to go ahead and grab 2 of these 20/50 calls, because then I can scale out of the trade. I prefer to do that, honestly, if I can. Mid price is 50. Let me get 2 of these bad boys right now for 100. Let's see if I can get filled on that. All I have to do is go back to the main menu, click orders, click my order, and if I don't get filled, I can change my ask price. Basically, right now I'm asking the mid price. So you can see the ask is 51, so people are trying to unload for 51. The bid's 50, so people want to buy for 50. And I'm at the mid price, which is 50. So we'll see if I can get filled. I only have 2 minutes here before the market closes, so I'll give it a few more seconds. If I don't get filled, I'll probably just offer 51 for each contract, because I don't really care about paying $2 more for the 2 contracts, and I don't want to like miss out on getting in this like I did a trade last week. I'm just going to click modify order, come down here and make it 51 for both. Let's just see if I can get in at 51. All right, cool. So I had to pay the ask price that time, which is one reason I like SPY, because it's so liquid. You can get it out in and out so easy, and you don't really ever have to pay the ask price. But either way, I had to pay the ask price, so I'm currently down about 4%, $4. But I have 11 days on this contract for this to work out, so I'm not worried about it. So I'm going to come over here and set my take profit and stop loss. Obviously, if it goes below this candle, I'm going to call so I make money as the price goes up. If it drops below this last red candle and below this trend line, this bottom trend line right here, then that's where this trade's invalidated. So that's my stop loss there. Hold on, let me take this one off, the 1974. That's just a distraction right now. All right, there we go. Stop loss is just underneath this last red candle, just underneath the bottom trend line right here. And then, of course, the take profit is going to be right here, because it's pretty much right where these wicks meet. This 1, 2, and 3 wicks, 4 wicks, matter of fact, that this line's touching. That's a key area of resistance right there, because you can see we got stuck to the upside there. Here, almost here and here, here, just fished through and went back down. Here we got stuck almost completely there. So right here where there's a lot of resistance, and right where we're basically at the top of this trend line, that's what I'm going to be watching. I'm going to be watching this resistance, this line that I've drawn, and this trend line, top of the trend line. But I expect it to at least go from here at the 2040s to up here at the 2090s. So that's where I'm going to watch this thing as far as upside and downside. So I'm going to get in here on this green candle. Not the best looking green candle because it's squeezing down a bit right now, but it's a solid green candle. Like I said, being that it's at a key support area and it's right at the 15-day EMA, I expect this to pop right here and bounce up. So I'm expecting it to bounce up from here to at least this point. So this is my take profit, this is my stop loss, this is how the trade's set up. Now I'm just going to give it some time to do its thing. Like I said, maybe a day or two, and I think within 2 days it'll be back up here, and my contracts will be pretty valuable. If I want to go a little bit more in depth, I guess, on this trade, I could also do this. I could say, okay, my first stop loss, so the place to sell the first contract is if it goes below here. Because if it drops just below this last green candle that it made, that's probably a bad sign there. And then it's also going to go out of that trend line. So that's probably where I'll pitch the first contract, is here, and then leave the second one here. And then for the take profit, I see there's a lot of support right here. You can see there's heavy support right here, and heavy support, often turns into resistance. So right here, where everything got stuck to the downside and then bounced back up, could become a resistance now where it gets stuck here. So I'll make that my second take profit. So I'll have one stop loss here to pitch the first contract, one here to pitch the second contract, one take profit here to pitch the first contract, one here for the second contract. So I'll let this trade ride out like this, and we'll see what happens. All right, as you can see, it's the next morning. I'm checking on gold, and it is down. It's below my stop loss, which was right here and right here. It opened up below my stop loss, so I'm just now checking on it, and it's already below the stop loss, so I got to pitch it. It says I'm down 28%, $29. Not ideal. I come over here, refresh, 29%, $30 down between both contracts. So yeah, that sucks. Mid price is 36, so I can sell both for 36 just to get out of it right now. Bam, those are done, gone. So now I'm 17% down on the account, $24 down on the account, 112. So that sucks, man. That really sets me back. But there's not much I could have done about it, because that is one of the negatives of a swing trade, is it can drop below your stop loss before you're able to get out. Like the market opened and I just checked my phone and looked at it, and it was already below the stop loss. I was wondering why I didn't get any stop loss alerts, and that would be why, because it was already below the stop loss at open. So sometimes that's just how it goes, It looks like you're going to get a move to the upside. Next morning at open, bam, you're down below your stop loss, and there's really nothing you can do about it except for pitch immediately. So yeah, that's how this trade's going.